What's going on, guys? Welcome to this session hosted by me, Stock-rfx, or Ross, call me whatever you like. This is going to be a session on retail traps, and we are going to be talking about the reasons why, 1, retail traps are used, 2, how they encourage people to enter the market in the wrong direction, and then again, how they can be shown. So we're going to be covering 3 topics, again, all on the same principles. So what we're going to do is we're going to start off up here on the diagram section with some examples of exactly what retail traps can look like. Now, a lot of you guys have probably seen this many times inside the market, but either have been unaware of what you're seeing, or you just look at it as price action overall. Now, retail traps, believe it or not, is essentially a very key part of the market itself. Now, the reason it's a key part of the market itself is because what it does is it engineers liquidity in any given direction. So what I'm going to do is give you some examples of trend line liquidity over here. Now, every section of liquidity is a trap to retail traders, okay? So we have here a downwards move and an upwards move. Again, pretty easy, this one right here, but you would have seen this before and you see me marking this up a lot. Now, in this case, what we normally have when it comes to these kind of moves is if we are moving up, it means that liquid is being built underneath, therefore causing the trap for retail to expect price to continue going higher. As smart money traders, we understand that these areas do not mean that they're going to hold forever. Exactly the same as downside liquidity, price moving down, it creates liquid above. So what we're going to do is just adjust these so we can see them. So that would be a liquidity high, and this would be a liquidity low. Now remember, when we're talking about smart money overall, we expect these areas to be taken, and we expect price to interact with, let's say, a lower zone like this, for example. But if you look at it on the other end of the trading spectrum, you have people that are essentially waiting for price to come back to that level so they can continue selling. Same as this, they expect price to come back so they can continue buying. Now, this is probably one of the most common retail traps that you will see inside of the market. Now, if I can just get my screen to stop wobbling around, that would be great. Now, the other ways that they build liquidity are in consolidated markets, okay? Now, consolidated markets themselves will offer something that you, again, probably would have seen. Now, this is normally shown in the form of the Asia session, or it can be found at given areas inside of a trend. Again, we're not going to go into that too much today. But what happens when you have a area like this, where they are essentially causing both sides of the market to be encouraged to go in a certain direction? We would know full well here that we do not want to get involved with this until it gives us a clear area of direction. Now, the other shapes that they will essentially conjure up out of their little box of traps that they make here is a very easy shape. You guys would have seen this many times, and it is simply the triangle shape right here, right? Now, the same thing occurs with this. All it is building liquidity by causing price to consolidate in a given area. Now, again, it's not going to be exactly like this every time, but it will look a little something like this. And you're having the same thing. You're having money generated across the top, money generated across the bottom. Now, these patterns, like I say, look like classic market movements, right? Because they are. They make up a very key part of the overall movement in price. Now, before we go down and find some of these examples and I explain to you why they occur and where they occur, what we're going to do is we're just going to be talking about quickly why this is so important to recognize these patterns inside of the market. Now, price overall has 2 jobs. So remember the main point that price is investing. It's putting money into the market, which causes movements in a certain direction. So the job of any given investment is to do 2 things: introduce money into the market and take money out of the market. So how do they generate the money that they're going to take? They do it with these patterns that you can see right here. They generate liquid from people like yourself. For example, they encourage you to short when markets are going to go up, so they're going to take your money, and the same continues on all of the patterns. So for example, here they will build lots of liquid across these tops. They will build lots of liquid across these bottoms, and most of the time you'll see them come up and then drop out and take both sides of the market, only leaving a small few left in profitable positions whilst the rest run to margin. Now, that in itself tells you that it's a super key part of price. Because of the way you will see these consistently inside of the market, it's going to help you determine where is a good area to get in and where is a good area to get out. So now that we've spoken about these and we've just covered the basic notion of what they're for and why they're used, now we're going to go down to the price chart and we're going to find some of these examples. Now, what I'm going to do is I've not looked for an area to actually find these examples. We're just going to go down and have a look. We're on the 15 minutes, so we might have to take a little scroll around and have a look, but I'm pretty sure it won't take us long to find these areas. Now, again, you'll probably already recognize a couple of these just from me showing you those. You'll probably be able to spot them on here. Now, what we're going to do is we're going to go along and just highlight some of these basic ones, and then we're going to look back and see how often they occur. So the first one we're spotting here is the classic move that I spoke about earlier, which is the consolidating market here. Now in this case we have liquid that was built up across the bottom because everyone wanted to buy, and we had liquid built up across the top because everyone wants to sell. Now, as I stated in the diagram section earlier, you can clearly see that they tap the bottom of this, creating stop hunts essentially for stop losses and for orders that may be wanting to sell, because people put sell stops below lows and expect price to continue down. So if they get tapped by this, they're going to go instantly into drawdown and they're going to lose all of their risk in a matter of seconds. So we have our first pattern right here, which is the consolidation pattern. Now, if I'm not mistaken, the Asia range is actually included inside of here. So again, great example of that. So the next one that we're going to find, I feel like it will be right here, the trend line liquidity pattern. Now look at think about what we see in the market, okay? And think about overall why we are seeing this and what is it doing. Speaking about what we were just covering earlier, we have lots of money built up in here. So what happens when that money gets taken? What do they have to do? If you have your stop loss down here and you're looking to buy higher for whatever your reasons may be, what do they have to do to assure that they can take your money? They have to be quick. So does it not show itself right here in the way that it goes in one candle, covers almost half of this retail area that they've built up? Once they get to the lower area, so they're assuring they take out everybody's stop loss, what do? They then continue to come higher, creating the same thing again. We have arced liquidity here, which is just another form of retail liquidity. It's almost like a trend line, if you were. They come up, feel the inefficiency gap, and they continue. So you can see already here how they're using retail to fuel the upcoming moves. So let's see if we can find some of the other patterns that we spoke about here. Let's see if we can find some triangle patterns. So this is a great example here. Now again, it doesn't look that obvious, right? But there it is. There's the retail pattern that we were talking about above. Now what did it do? It generated liquid on the downside. It generated liquid on the upside. So what did they do? They took the money from below. They then waited for all of those people to get in, because if you're selling from the top here and we have a trend line, if you were, what does price do? It kind of carries on playing with it a little bit. So they're loading up this area with even more money. And then what do? They aggressively take it. Now again, we've scrolled across about probably 2 weeks, maybe, not even that, and we've found an example of each one already. They're everywhere. Literally everywhere. I just noticed here as well we have another classic trend line liquid made, and look what happens when they get to the point where they know they're going to take it. Look how aggressively price moves down compared to the way it's moved up. Very methodical, very back and forth. Gets to a given area and it drops with great volume, taking all of the money that was set out here. Then the same thing applies. What happens once they've breached this level? They reverse price, creating another one of these. So everybody that got stopped out on the first time, where are they getting in on the second time? And where do they get taken out? Exactly the same area. Now, you guys probably would have fallen victim to this as well, because I know for sure that I have. When I had been trading in the past, it was something that I would always see. I would see something like this, the classic downwards trend move. And I would bank on this holding here. We'd have a small reaction. It may come above and I'd say, oh, it's fine. You know, it would drop down a little bit. Oh, look, we're in profit. This is amazing. I'm going to sell again from here when it comes back. And the same thing applies when it gets to a certain level. Look how aggressively it pushes through this area. So aggressive. Now, this is all to do with trend direction. Honestly, most of the retail traps you will see will be in the counter trend direction. So for an example here, if we look at just this move itself, so we're just looking here from the bottom left to the top right, notice what they're doing when they counter trend. So we have obviously a trend move, a counter trend move, a trend move, counter trend. Now look what's present at every single counter trend. Trend line liquid. They come up, they take almost all of it. Then what do? They engineer some more trend line liquid. So what do? They take all of it. Then again at the next point they engineer more. The next point they engineer more. See how every point price stops in an upwards move, they're creating liquid to the upside. Always doing the same thing. Now, one thing to really think about is when they're doing this on the upside, so they're creating trend line liquid on this push down, taking it, pushing up, creating more trendline liquid, taking it, creating more trendline liquid, taking it. It gets to a point where what have they done? On the underneath, they have created another version of this trap in the overall trend movement itself. Now, what happens? You guys will know this. What happens when we get to a certain level? That liquid will be taken as well. It will be. It's just inevitable. It's always inevitable for that liquid to be taken. Now, what I want you guys to do is really have a look on your charts and think about how you could perceive this if you weren't a smart money trader, and use these traps to really catch some good moves in the market. Now, in this sense here, we have another very obvious triangle pattern that was formed. Now, in this case, we only liquidated the low. We didn't liquidate the high. Now, the same thing applies. We have exactly the same thing happening. Trend line liquid being made in the counter trend move. Again, trend line liquid being made in the counter trend move. The whole time they're building liquid on the downside, and they will collect as much of it as they can. Now, to have a little bit of an edge inside of the market, what we always want to be looking for is looking for these liquid areas and finding inefficiencies inside of them. Now, they're normally going to be on the upper areas of these zones. So when I say upper areas, if they've started building liquid around this zone and they push down, expect the gap to be in this area. So you can probably see what I'm going to say. Let's just say, for example, we had a POI here. Look at the way it taps it and then travels away, taking all of the liquid that they built on the way up there, giving what? The retailers that are looking on the hour, trapping them into buys by pushing price higher and higher. All the people that are selling on the 15-minute, trapping them in by pushing price higher into this area. Once you are selling in this area, what would your bias be if this area becomes broken and you see an aggressive push like this? You're going to automatically go, well, you know, we should probably go to the buy side now, right? Being smart money traders, we understand this is not the case, but you need to understand that smart money traders make up a very small majority of overall traders, okay? So when we look at price and we see this and say, well, that looks easy enough, to somebody else it looks like a totally different thing. Now, I'm not saying retail traders, not retail traders, but pattern traders don't make money. That's not what I'm saying at all. What I'm saying is it's a engineered way that they create money inside of the market, and they use the shape system that a lot of traders use to do this. Now, we also can understand that, yes, we did make a very clean downwards trend here. We did. Now, notice what it done. Exactly the same as it done here. And this goes back to the fractal side of price. So we have a very efficient push down, filling in the gaps lower. We also create liquid across the top. We then grab that liquid and we continue our trend. What did we do from this high? We engineered liquidity above. What did we then do? We came back to a gap that needed filling and we dropped down. again creating more liquid before the smaller drop occurs and continuing. The whole time building up liquid across the bottom here for the move when it is finished. So what is the reasoning for this? As we discussed earlier, the reason for this is to fuel market movements further, also to encourage people to be incorrect inside the market, because what you need to remember is if trading patterns and trading overall was easy, everyone would do it and the markets would become something that they shouldn't be, which is, you know, like an open house, if you were, and everybody would be making absolute millions and it would be the easiest thing on earth and everybody would be laughing, when in reality this is not the case, and you guys know this. Now, always keep in mind where the money is. The money is what makes the market move, so they are going to run for the money. Now, there's also another form of liquid that we didn't talk about, because essentially you guys would already know this, and that liquid comes in the form of flat line liquidity. Flat line liquidity can be found at support resistance levels. It can be found, many different levels. But overall, any areas that look too clean or too flat, so for example like this or like that, any areas that look too clean or too flat will more than likely be taken. Now have a look at this. Look what price does. If we measure out from the top here, it literally taps it and goes. That is not a coincidence. It's happening for a reason. It's happening because it's been put there on purpose. That money is put there to be taken. And notice what they did on the way up to that point. They created trend line liquidity again for when that price had been taken to be collected. Continually doing the same thing, exactly the same as this. Look, we have flat line areas here. Really easy, really clean. They take it. Where do they go? To the inefficiency area to continue their move down. So what I need you guys to think of is when you're looking at a move, especially on the bigger time frame, unless we are above our key structure or below our key structure, we are still going like this, right? If we've broken structure to the downside, for example, like this one. Okay? So all of the areas in here, no matter how enticing they may be, no matter how good they look, no matter how clean they are, more than likely they are setting a trap for you. Now, the markets move in a way that a lot of people become infatuated with hunting overall trades themselves. So they will put in place really obvious areas that you could get involved in. I mean, look at this area, for example, here. It taps into, I mean, barely, but just about taps into this order block, drops away, it then comes back, has another tap and drops lower. At this point, would you not be looking to either short from this area or try and catch another short further down? Most people would, but keeping the bias of the overall high and low and understanding everything in here is built to engineer liquidity and trap retail is going to save you a whole load of headaches, okay? So, again, go onto your own charts and check this out for yourself. This is not something that just appears and is just, on my charts because I'm looking for it. It is everywhere. Now, it will consistently happen on a bigger and smaller time frame, always creating what? Liquid to be taken. Liquid to be taken until we've generated enough money inside of here, and then we do what? We continue the trend, right? Now, obviously, you can't just trade away from retail patterns. You can't just trade away from liquid areas. You have to have more of an understanding in price, and that itself is what smart money concepts does, and how we trade the market allows us to steer clear from these areas and only aim for inefficiencies inside of the market to then use these liquids as a confluence, if you were. So let's just say, for example, let's take a example with this. This is a great example here. So exactly what we were talking about with the highs and the lows. Any smart money trader or any trader that has, half a decent pair of eyes can see that the only gaps in here are in this higher area, right? Everything else has efficiently tapped, run, tapped, run, tapped back, run, tapped back, run, tapped back, and it's created a low. So we would know already that we want this area to be tapped into. So how can we use the retail traps as confluence? We can use them as confluence by identifying the fact that this looks very appealing to a lot of people that are trading lines. Now, like I said before, this is no hate on people that trade with support resistance. I'm not saying that it doesn't work. I'm not saying that you can't use them. But the way that we trade, we can use them in the opposite way and look for them to be liquidated rather than looking for them to be held, if you were. So having that understanding and being able to mark these areas is going to help you a lot. Now, let's just say, for example, like this. Let's say, for example, we had a classic trend move underneath like we do here, and we have flat areas above, and we have a POI. I know on this time frame we don't. So, for example, I'm just going to draw one in. Again, this is purely for example purposes. So let's just say we had a POI here. When we had this tap, if we came down and we took, again, even look at this, the small interior trend line. Look how clean it is. If I just zoom in on this, look how clean that is. They all line up perfectly. They make a perfect trend. Perfect. Why? Because they wanted to take that liquid to equal out the imbalance. They've pulled back, tapping into a higher area, and then continued on their movement down. If we have liquid below, inefficiencies above with more liquid as well. Once this liquid is taken and we tapped into our big money order block, so in this case, like I said earlier, there isn't actually one here, but once they've tapped into this, that means they've done what? They've collected this money, they've collected this money, they've maybe, or they didn't collect this, but they've collected all this money, and where have they dropped it off? They've dropped it off here. So what would we expect from this? A new investment to appear. So what's that new investment going to do? It's going to take the money they've been building below. Consistently doing what? Introducing money into the market, like I stated earlier. So introduction of money, creation of money, liquidation, reintroduction, creation, liquidation. The same thing is going to appear over and over and over. Here's another great example. Introduction, big push down, creation of money in the form of retail traps, taking of the money, reintroduction of money. What are they doing? They're picking up all the cash they created with these retail traps. They're dropping them off at the most appealing point for them. So in other words, institutional orders or order blocks that haven't been tapped into, and then continuing the overall trend. So this goes into the understanding of structure and how we shouldn't be taking too much notice of our substructures. We should always be paying attention to where our major swing points are, depending on what time frame you are. Even on the 1 minute, it still has swing points in there. And we need to continually track where the retail guys are getting in. And we need to track where they're being induced into the market. Now, another thing to really pay attention to, guys, if you have efficient price action, so let's find some efficient price action for you. I mean, there's lots of it everywhere, but we'll use this as an example. If they're being efficient and they are, for example, running back really nicely, coming up, breaking structure, running back really nicely, coming up, breaking structure, running back again, coming up, breaking structure. What does that give us? It gives us lovely efficient price, but it's also doing what? It's building money. Why do we know it's building money? And why do we know it's on the downside? We know it's on the downside because if we talk about investments like we do with smart money, there is money above each one of these points. So when these points are being taken, we know that that money's been taken out now. That money's been taken out now. So where is the other investment coming in? At the base. Yeah. So we know the only places that haven't been taken are the lows, meaning that all of the money is stored up underneath. Until we start to take money from lower areas, like so, we would not expect this money to be taken. Now the same thing applies. They will consistently make it until they have enough. When they have enough, what will they do? Continue the trend. And notice how we were looking at one tiny area inside of an area we'd already spoke about. So it shows you how fractal the market really is. So guys, what I would really recommend for you is to go and check this out and obviously try and incorporate it into what you know as trading overall. But understanding that the creation and the engineering of liquidity is a very key point inside of the market is always going to give you a slight edge over people that are trying to trade these patterns themselves. Now, I'm not saying you can't trade these patterns because, for example, here, this would have given you plenty of opportunities to buy away from the trend line if you were trading like a trend line trader, or you could have bought at each POI. You know, same thing applies. But understanding that it's coming above this liquid to fill a gap that was created a long time before is always going to give us a better opportunity than trying to trade off of a line based off of peaks and where investments are coming into the market. So guys, I hope you've enjoyed that video on retail traps. It's been a reasonably short one. We don't want to keep it too long. We are live on Discord, so we're going to give everybody an opportunity to ask some questions very shortly. But if you haven't already, make sure you hit that sub button, make sure you hit that like button, drop a comment down below if you want to show us some love. But apart from that, guys, I'll catch you all in the next one. Peace out.